Now, by the way, the other thing you can do is you can watch for spikes in volume. If you're thinking about where's my entry point into a company, you can watch the volume of a company, and sometimes that'll give you a clue that somebody significant is buying it.
Ooh, talk about that a little bit. That's a new one that we've never talked about.
Yeah, I'm thinking in particular, like I'm thinking of a company like Berkshire Hathaway, where the stock's on sale by Buffett's criteria. That is, Warren Buffett years ago said that if Berkshire Hathaway's stock price ever got to 120% of book value, that he would consider buying it at that point or lower. Not that he would buy it, but that he would consider buying it. So that's sort of become the Buffett put, if you will, in the market.
He also said recently that he no longer agrees with that.
Right. Well, not that he doesn't agree with it.
Yeah, you're right. Not that he doesn't agree with it, but that he has a different way of, because of the accounting rules changing, he doesn't like book value as much anymore.
Yeah, he has, because book value can dramatically go down or dramatically go up now that the reporting requirements are different. But in general, and basically what Berkshire is doing is they took away that restriction. The board basically had it as a restriction that you couldn't buy it. Now they're saying you can buy it when you want to.
Oh, I see. So they kind of had that as a rule inside the company. I see.
Yeah. So right now the stock is below that. At least it was when we're recording this, or in the ballpark of that purchase price. And so if you suddenly see a spike in Berkshire shares in the market, it might, I haven't seen it, but it might be, if it happens, an indicator that Buffett has stepped in with Berkshire money and is starting to buy the stock as an insider. Mm-hmm. And I'm saying that right now just because there's a lot of speculation about why he would do that. He's sitting on $140 to $150 billion of cash. He's stated in the past that when it gets down to this level, it might be a very good use of cash to buy the stock. And he hasn't bought it yet. But if he stepped in and started buying it, we would probably see a pretty significant spike in volume, because he's not going to step in and do it with a few $100 million. He's going to come in there with billions, and that would be significant. So you'd want to know that. If you're watching Berkshire, you'd kind of want to know that is happening before Buffett comes out and says, oh yeah, we're buying the stock 48 hours later.
Oh, I get where you're going. So you watch the volume chart, even though there's been no announcement of insider buying.
Right.
And take from that an indication. Well, obviously somebody's buying, right? If there's volume and the price is going up.
Somebody major is buying.
Yeah.
Yeah. And here's the thing. It's possible for a big player like that to go to the SEC. And I hate this, but this is true. They can go to the SEC and say, look, we're so big that if we have to announce that we are buying this stock, it's going to create a large difficulty for us to do what we want to do, because the public is going to jump in on top of us and drive the price up out of this range. So if you will give us an exclusion to this rule, we would like to go and buy the stock first and then declare that we did it. And I don't know why they give them these exclusions, but they do from time to time, particularly when they're trying to buy some other company. I don't know if they'll do it on their own insider company, but they certainly have done it in the past on companies Buffett's trying to acquire. And they'll do it for other people as well, who are big acquirers of stock, and they just don't have to disclose that they're doing it when they would, under ordinary rules, have to disclose that. And by the way, they're changing all this. This is the other thing. It's really, right now, they're changing insider trading rules.
Really? I don't know anything about that.
Yeah, there's a 60-day fact finding, or whatever they call it, where the public has a chance to respond. I don't know what you guys call that. 60 days. I don't know that it started yet, but they just announced it in the paper a couple of days ago that it's going to be a 60-day hearing with the SEC about whether they should move the limit or move the minimum amount of money under management from $100 million to $3.5 billion to be the new minimum that you have to have before you have to do a 13F filing. Which was
this is different from insider trading. This is This is disclosure of ownership of funds.
Just made me think about that.
Yeah. Super interesting. I hadn't read about that.
But it would eliminate investors like Guy Spear, Monesh Prabrai, and a bunch of the guys in the 46 people that I track carefully on our website. It would eliminate a bunch of them. It won't eliminate Ackman, Einhorn, Loeb, guys like that, but it's going to eliminate some of the best investors in the world who intentionally keep their funds below 3.5 billion. And I'm torn a little bit because I certainly understand why me or anybody else who's buying a bunch of stock doesn't want the public to know what we're doing. We're trying to get a position. It's hard to get it because we got a lot of money that we're trying to get into the market, and it takes weeks to get in. A small investor has such an advantage. You can walk in and there's a good price. You can get everything you want to buy right then. Boom. 10 seconds later.
Yeah.
Whereas, it might take me on a smaller company. We've experienced this. We've been trying to buy some stock in a company. We cannot get enough of it without driving the price up. I mean, you look at Charlie Munger's company, a little daily journal.
Mm-hmm.
I mean, there's so many people following that. If you try to go in there and buy some stock, that price can jump 10% on even just a small stock purchase. So imagine what it's like if you've got billions of dollars and you're trying to get into a position. So I understand why they don't want to do it. On the other hand, man, is it good for the little guy to know what's going on out there. I just love it for the small investor that they can see and get some clues about how to clone and who to clone and how powerful that is. And so I'm going to write the SEC and ask them to not do it, not make the change. I'm sure that I'm kind of pissing in the wind, to tell you the truth, but I think they probably already made up their mind. It's one of those kind of things where let's go let the public have their little time in front of us, but we've already made up our mind kind of deal.
I know nothing about it. This is the first time I've heard about it, but just because they're holding hearings about it doesn't mean that it's a done deal,
but the way they're writing about it, it looks like,
oh, really? Is that in the Wall Street Journal? They're writing about it like this is coming. That's interesting. Yeah. It's interesting because I, again, without having done research on it, the whole idea behind 13F filings, which are the filings in which fund managers have to disclose, is specifically so that the public knows who owns what. It's so that there's knowledge about who the major players are in these various companies. It was not so that the little guy could find out what investors were doing, I don't think. I think that's a side benefit. Right. But it's so that we know that these 3 or 7 major funds who are super powerful and have billions all own this, I don't know, what's a Stitch Fix? They own, whatever, like some smaller company that they may have a lot of influence over. And if you're somebody looking to invest, you want to know who owns it, who else could take their money out, and to know especially which ones are major institutions, which ones have large amounts of money behind them and could add more or could remove it. And so it's interesting that
I think you are 100% right. And that's the logic behind the change, because they're basically saying when this was put in, $100 million represented X percentage of the market and was a certain size of fund.
Right.
And today that equivalent is 3.5 billion. You guys, if you enjoyed this video and you feel it was valuable in teaching you more about how to invest, hit the like button and please share the video with your friends. And if you want more investing content, subscribe to my channel. And don't forget to click the button on the screen. We got a free gift for you. Thanks again for watching.